and I know that payroll is really exciting. So just let me know, send questions through your chat as we move along. I know we have a Q&A at the end, but I think we'll probably do Q&A throughout, just so we can touch base on your questions quicker. Let's see. How do I move you guys? Okay. So my name is Shireen Corlett. I am a CPA at Clark Newber. I'm also certified in payroll. FPC stands for Fundamental Payroll Certification. I have a tax background, federal tax background. I was in tax for 9 years in public accounting. And then I moved over to our accounting and consulting services group about a little over 4 years ago. I mostly work with nonprofits, some engineering firms, and I do a lot of our software implementations. We use Intact, QuickBooks, Adaptive, all sorts of software. So I really enjoy doing that part too. And I also oversee our payroll clients and do high-level reviews of their payroll. And Juliana will be assisting me today. Juliana, do you want to introduce yourself?
Yeah, I think I've met a lot of you before, since this is the third time you've seen my face. But I've been with Clark Newber for the last 3.5 years or so. I started my career there, though, back in 2006, and then I went off in industry and worked for a lot of smaller companies, and I started my own consulting practice and then brought that into Clark Newber, and I focus on a lot of CFO and controller consulting projects.
Thank you. So the first thing I hear when I talk to most of our clients is, I don't do payroll. I don't like payroll. I don't understand it. Please do it for me. So there's a lot to cover. I actually had a hard time picking what to cover today because there is so much. I just took my 4th payroll intermediate segment of 6. And there is so much in just those 2-hour chunks. And I was like, should I do this? Should I do that? So today, just let me know, if I need to slow down. And again, ask questions. I might not have all the answers, but I will find them for you. And here we go. We're going to talk about core concepts of payroll, federal and state compliance, paychecks, so different parts of your paychecks, your fringe benefits, and your voluntary deductions, admin and management of payroll, and the end result, the accounting for payroll on your financials. So our first polling question, if you want to pop that up, Jessica. So we wanted to get just a general idea of how your company currently processes payroll. Do you use in-house? Do you use a third-party provider, maybe ADP, UltiPro? There's so many out there. Getting a couple in.
I'll give everyone a few more seconds to answer. All right, I will enter the poll results with you now.
Okay, so it looks like it's all in-house. That's impressive. We have a couple of clients that do in-house payroll that we've converted over to a third-party provider. So I know all of the complexities that come with doing payroll in-house. That's good. Thank you, Jessica. So the first item I wanted to talk about is worker classification, because we get the most questions from clients about worker classification questions. depicting independent contractors versus employees. And it's really important to understand who is an independent contractor and who is an employee, because if you make an error and you get audited, there are pretty substantial penalties that can be assessed. I haven't seen penalties assessed yet based from audits that I've seen, but there are penalties, especially if you report an employee or an independent contractor or an employee incorrectly with like a negligent way of doing it. So when you think about an independent contractor, you want to think about, do they work for multiple employers, not just you? Are they getting their wages from multiple employers? Do they bring their own tools? Do they decide how they're going to do their job, when they're going to do their job? They work by their own schedule. And in the end, are you giving them a 1099, Form 1099, which you should be doing? And a common law or a regular employee that goes on your payroll, that pays payroll taxes, they work mostly just for you. Employees can have multiple jobs, but they use your tools, your scheduling. They're following how you want things done, your instructions, and you're providing them a W-2, and they're paying payroll taxes, and you're paying your employer payroll taxes. So make sure that you are educating your managers, your staff, when they have someone working for them on a project or a job, to know whether they're a contractor or an employee. It's really important. And you also want to look at Washington State, because each state might have different rules around what is an independent contractor versus an employee. And this website I provided here actually goes through step by step how to determine if that person is an independent contractor per Washington State rules. So if you click on this, and I don't know if it will show up in my screen or not, but I did want to show you. Are you able to see that? I can't hear, but okay. Can you see it, Juliana? Yes. Awesome.
Yeah,
okay.
If you can make it a little bit bigger.
Oh, sure. I can make it a lot bigger.
There we go. Yeah.
So they actually provide a really nice tool for you if you're in electrical or construction or all other industries, and you just keep going down these steps. The last one is important. If on the effective date of the contract, the individual is maintaining their separate books of records, so they're maintaining their own records, and you're not including, their gross wages, their taxes, any of that on yours, that's a big telling sign. So definitely use this link if you're having questions, or reach out to us. We're happy to help. Okay. The next fun part is the Fair Labor Standards Act. So the Fair Labor Standards Act really establishes the minimum wage, the overtime pay, record keeping, youth employment standards. They've been around for a very long time. The minimum wage is $7.25 since July 24th of 2009. Different states have different minimum wage laws, of course, so they have to at least meet the federal minimum wage, but they can be higher, and a lot of them are higher. Overtime rules, so they cover non-exempt versus exempt overtime rules. What happens when a non-exempt employee works more than 40 hours or an exempt employee works more than 40 hours. That's all covered under the FLSA overtime rules. They also talk about record keeping, what types of records you should maintain, how long you should maintain them. You should get a poster, I believe, in the mail that you should keep up displayed somewhere in your office. And then they talk about child labor law, which we won't touch on here, but the IRS website has a great FLSA structure that's easy to kind of flow through if you ever wanted to look at that. So there were new overtime rules effective January 1st of 2020. They raised so the standard salary level was $455 per week, and that was 15 years ago, over 15 years ago. So they haven't changed that for over 15 years, and now it's $684 per week, or $35,568 for a full year for a salaried employee. They also raised the annual compensation level, so highly compensated employees, instead of the enforced 100,000, they're now getting 107 per year. And they're allowing employers to use non-discretionary bonuses and incentive payments to satisfy up to 10% of their standard salary. And I don't think the motion picture industry applies to this group, but I love this table because I think it gives, I'm a very visual person, and I think this gives us a good layout of trying to depict who's an exempt employee and who's a non-exempt employee. So the biggest thing to look at is their job duties. So are they a professional admin executive person? They're likely an exempt employee, and that means they're not entitled to overtime, but they are entitled to that pay rate, the minimum salary amount of $35K. And typical jobs: doctors, teachers, accountants, attorneys, lawyers, people that provide professional services. Those are typically your exempt employees. Admin people sometimes. Hourlies, construction, customer service reps, cleaning, those are all usually non-exempt and subject to overtime rules. And there are overtime rule calculations. There's 2 overtime rule calculations. So you can look those up and pick which way you're calculating it. You will want to document what you decide in your payroll procedure. Another part of determining overtime is determining your work week and your pay period. So those are 2 separate things. Your work week is a fixed recurring period of 168 hours chosen by the employer. So it can be Monday through Sunday, or Saturday through Friday. I think that's Sunday. So just the 7 days, that's your week. And so when you're calculating your overtime rules, let's say an employee worked 40 hours in week 1 and 60 hours in week 2. Well, in week 1, they didn't earn overtime, but in week 2, they did. And so you're going to kind of calculate your overtime based on that. I see some chats coming through, so we'll do a Q&A in just right after my next slide. Each work week stands on its own, and then you have your pay period, which is the 2 weeks of, so it's your 2 weeks, two work weeks, and then that's going to determine your payroll. And it's typically, mostly I see biweekly, semi-monthly. I do have some clients that pay monthly, so they pay 1 paycheck at the end of the year. And I am starting to see more payroll providers, third-party providers, implement on-demand pay. So I think that on-demand pay is going to be a thing eventually. Biweekly is 26 pay periods, and semi-monthly is 24 pay periods. And with a biweekly, just remember that you have a leap. If you have a leap year, you'll have an extra pay date. It won't change the total amount paid, but it'll change the amount paid each pay period. And this is just a little chart that kind of tells you, you know, your work week is the line, but your pay period is the 2 weeks. So their pay period is Monday through Sunday. And I have one polling question, and then we will do questions from you. Okay, the question is, which one of these examples is an independent contractor? Is it a person that works for a single person, that's a lot of persons, who manages his or her schedule? B, a person that maintains his or her own schedule and books and records? C, a person that receives a biweekly paycheck and pays federal taxes, or all of the above?
All right, I'll give everyone a few more seconds to put in their answers. All right, I'll go ahead and end the poll, and then I'll share those results. All right, are you able to see the results? I am sharing those.
Yeah, everyone got 100%. Great job. It is B, a person that maintains his or her own schedule and books and records. So A, not a person who works for their manager and their manager depicts their schedule, and not a person that receives a biweekly paycheck. Great job. Do we want to do a few questions if there are any?
I do believe Sharon does have her hand raised, so I can go ahead and unmute her. All right, I think she is unmuted. Go ahead, Sharon.
Yeah, so the question that I had was on the month hours where it said 168. I had seen something that said 160, and I was just curious if there was a change or something based on like the benefit package, like the sick and the sick leave.
I don't believe so, Sharon, but let me, I will check that during our break and get you an answer for you.
I just wasn't sure if they were using the 160 as an example or if something had changed, so.
Okay, I will check on that.
Thank you. And the on-demand, what does that mean?
That means that employees will get paid, and I don't know the specific procedures around it, but it means employees will get paid as they work their hours. So it could be daily pay automatically put into their paycheck.
Oh, okay. Thank you.
Yeah. Any other questions?
I do not see any other hands raised or questions thus far. So if you want to go ahead and continue, and I can let you know if there are any that pop up in the meantime.
Perfect. So we're going to talk about compliance, mostly the most common forms that you see that you probably prepare, since a few of you said you prepare this in-house. So the first one is, I'm sure you're all aware, there's a new Form W-4 that started on January 1, 2020. Employees hired, so if you're an employee and you're hired before 2019, you may continue to use the information that's on your old W-4, your 2019 Form W-4. You're not required, employers can ask to have employees change their W-4, but employees are not required to. If you have employees that are hired after 2019, they must complete the Form W-4 on the new 2020 form. And if you don't receive that new 2020 form, technically you're supposed to treat them as single filer with no adjustments. So that is the highest tax rate. So just make sure you get those forms from them if you haven't. this, I get a lot of questions about, you know, where or how, what do I put on my W-4? And I suggest not giving tax advice, you know, not a tax accountant. Direct them to this tax withholding calculate estimator, and they can go through these steps. And it's pretty simple. It helps them determine how they should fill out how much they should be withholding, how they should fill out their new W-4 form.
I think that's very helpful because that's what new employees, I mean, they just don't want to have to think.
Yeah.
And so it's best to provide them with the tool to, you know, because if you don't, then if you take out more than they're expecting, they're going to be mad and upset that they didn't get paid what they were thinking that they should have been paid. So
yes,
I've just seen
agree
provide them with as much tools as possible.
Mm-hmm. I was on my class today and they were talking about the Form W-4, and the instructor said he does not let his payroll staff provide any advice as to how to fill out this form, because there have been times when they've had to pay for the underestimate of the employer's tax. So it definitely use this estimator. It's helpful for them, or give them the estimator to use. So our federal payroll taxes, there's FICA, which is your Social Security, Medicare, and additional Medicare. The rates haven't changed from 2019. I'm not sure what they will be in 2021, but it's 6.2% on wages up to 137,700. So anything over that, you will not assess the employee and employer Social Security tax. Medicare is 1.45%. And then if you have an employee that's over the threshold, and there's different thresholds for different filing statuses, but if they are over the threshold, it's 0.9%, and that's an employee only paid tax. And then FUTA, or FUTA, however you want to pronounce that, unemployment tax. It's employer paid tax and 6% of the first $7,000 of gross taxable wages. With the unemployment tax, there are states that have their own. So Washington State has our own unemployment. A lot of states have our own unemployment tax, and depending on the state and the credit, you can essentially offset your federal unemployment tax. And so I have an example. So for example, Washington State has experience ratings, and those are sort of like premium. It's a premium concept. So if our employer is assigned, if you're assigned an experience rating of 0.7% from Washington State, you get a full 5.4% credit against your federal unemployment tax liability. So essentially, you'll only pay 1.3% of federal and state, because if you take 5.4 minus the 6% of the normal FUTA tax rate, you get 0.6% plus your 0.7% is 1.3%. So just something to note while you're preparing your Form 940. So I'm going to show you the tax forms, and I'm sure many of you have seen them. So the Form 941, due quarterly by the end of the month following the quarter. So, and I know that the Form 941 for quarter two, starting in quarter two, has changed pretty drastically because of COVID-19. I've done some work with some of our clients for their employer retention credit. And so if you have questions, please reach out to me. I'm happy to help. But this is essentially what it looks, the first page, what it looks like now. You'll want to make sure that when you're doing your payroll that you're tracking your qualified sick and family leave wages as well, because you need to report them separately on here. Your Form 940, this is due annually. So your deposits are due quarterly. You want to calculate those and deposit those quarterly, and then your form is due annually, and you'll make any kind of true-up amount as a fourth quarter payment on your Form 940. Again, remember that so this, I think part 3, which you can't see, tells you how to calculate any state credit that you may receive. And then there are also rules around officers and being exempt from unemployment tax as well.
I had a quick question, Shireen.
Yeah, go ahead, Sherry.
On the 941. When I did my second quarter, it said that I had a refund coming.
Mm-hmm.
And so I went ahead and mailed that in. How long does that take?
Oh gosh. I have no idea anymore with the backup in the IRS and the mail system and all of that. So unfortunately, I don't have a good answer for you. It could take, 8 weeks to get it back. And just because I'm curious, were you able to figure out why you had a refund? Like, is it because of the COVID stuff?
Yeah, because of COVID-19, and in my QuickBooks, they walked me through it and everything. So it was correct. And I was just curious on what happens, how long it takes, are they going to wait till the end of the year? Or
I wouldn't think so. I'd think they'd try to get your refund to you as quickly as they can.
Right. Okay. Thank you.
Mm-hmm. So that brings us to COVID-19 and payroll. There are a lot of acronyms when it comes to COVID. So we'll go through them. I have a chart in the next slide that I found when we were processing payroll, and I think it's very helpful. So I'll go over that. FFCRA, Family First Corona Response Act. So this is, the big act that required employers to provide paid sick leave or expanded family and medical leave for reasons under COVID. And this, I won't open this one, but this is the FFCRA Q&A section, and they keep adding questions. I don't know what number they're at now, but there is really good information here. If you have questions on how to record your COVID, who it applies to, when to use FFCRA or EPSLA or EFMLE. So check that out. Emergency Family and Medical Leave Expansion Act, that was under the FFCRA. So it's mainly what I see is that it's mainly being used for, parents who are at home with their kids who can't be at school. And there's different rules around it. There's also, options for employers, such as you can use it in increments, or you can only use it 8 hours a day. So there are options for employers to make employers' lives easier, or also to help out the employee. And then the Emergency Paid Sick Leave Act. That act requires employers to provide up to 80 hours of paid sick leave to employees who need to take leave from work for certain specific reasons. So there are different reasons, and I think this next slide is helpful. Can you see that okay? So ignore this because this was just a payroll tracking column, but ignore the payroll tracking, the second column. The first column lists reasons why you might take leave due to COVID. So if you're in buckets 1, 2, 3, and 4, you'd be under that paid sick leave. So your employer must provide you 80 hours full if you're full-time, or if you're part-time, it's an average over a 2-week period. And then there's wage rates. So your regular pay up to a certain amount per day and up to a certain amount total. Okay. And then buckets 5, which is the one I'm seeing most of right now because school started, they have paid sick leave of 80 hours plus paid expanded family and medical leave for up to 10 weeks. So I am a mom. I have 4 kids. I take care of my daughter's schooling in the morning, and my husband takes over in the afternoon. I'm taking my paid expanded family and medical leave, and I get up to 10 weeks of it. And that is at 2/3 of your regular pay, up to $200 per day. Okay. And then number 6, I haven't seen yet, but it's essentially under the paid sick leave. Any questions?
We don't have any questions as of yet, and I don't see any hands raised.
Okay.
You're explaining everything very well.
I know we're supposed to take a break. I don't know when, but do you want?
Are we gonna get these PowerPoints for the information here?
I think
Yes,
so.
the slide deck will be sent over for everybody. And then if you're ready to take a break, we can go ahead and take a 10-minute break, Shireen. Just whenever you're ready to stop. I don't think that it was scheduled for probably about another 15 minutes, but
Okay, I'll keep going, and we can stop at the next section.
okay, perfect.
So we're going to talk about more compliant state payroll taxes, Washington Labor and Industry, LNI. Those reports are filed quarterly with Washington State. Usually you'll use your Secure Access Washington to get to your LNI section. And if you don't have SAW, I'm sure you do, it's very useful because it just compiles all of your logins into one and then takes you to the site that you need to get to file. Your LNI is based on wages, or your LNI reports have wages and hours. So those hours are worked hours and those wages are working wages, not holiday, vacation, sick time. The rate is given to you by Washington State. They use sort of a business risk factor. How risky is your business? How many people might get hurt on a construction site versus a public accounting firm? So every company will get a different rate. Rate, you may have more than one rate too if you have admin persons and construction people. We have an engineering firm that has admin people at one rate and their engineers at another rate, at a higher rate. So that gets multiplied by their hours worked, and that is the amount that you pay in every quarter with your filing. Washington Employment Security Department. There's a new system that they started, Employer Account Management System, where you go to file your quarterly Employment Security Department forms. In most cases, I haven't seen a case yet. No, I haven't seen one yet where they haven't had to pay. So in most cases, if you have an employee and working in Washington State, you have to pay Washington State unemployment taxes. You'll file those reports quarterly. You should file even if you do not have employees that were paid for that quarter. Once you filed your first form, just continue filing until you are, unless you are shutting down your business, then you'll formally dissolve. And there are special rules for corporate officers that are exempt from having to pay Washington unemployment taxes, but they may volunteer to still pay. And again, that goes back to your Form 940, and you'll have to take that into consideration when you're calculating your FUTA.
How does, Shireen, how does that work if the owner wants to claim unemployment because in the past, because I didn't have the coverage, then when I had to take the sabbatical, I wasn't able to claim any unemployment?
Did you pay in to unemployment, or did your
Yes, I did.
company paid in? And you paid in under you, like you. So when you filed, you had your name, your social security number,
Yes.
your wages.
Right.
Okay.
Yeah, I did I changed from an LLC to an S Corp to have a W-2.
And you filed, but you weren't able to claim unemployment.
Yeah, that's what they told me. But now that I think about it, I paid into it.
Yeah, that would be a good question to ask them.
Right. So
it's
is
my
that
understanding that I would ask them. It's my understanding that if you, as a corporate officer, voluntarily paid into Washington State unemployment, that you would be able to claim that unemployment if you needed it.
Right. Okay.
Washington paid family medical leave, just to complicate Washington State payroll taxes more. So these are premiums paid in to the state to take out later if an employee needed to take family medical leave. I believe there's a list of what counts as that leave. It's up to the same Social Security wage base of $137,700. Their total, so the total premium is 4% of gross wages, and it's split between employee and employer. The employer is 36.67 of the 4%, and employee rate is 63.33 of the employee rate. And there is an exemption. Employers with 50 or less employees do not have to pay the employer portion, but employee portion still must be paid. However, I do have some clients that pay the employee portion on the employee's behalf. That is taxable to the employee, so that should be taken into consideration as well. This calculator is handy. I will show it to you.
So I have a question. Why would they pay that for the employee? Is that something that they would, the employee would elect?
Yes, the employee can elect to pay their own, or they can have it's an employer election. So they just wanted to give another benefit to their employees and pay for their premium for them. It's taxable to the employee, so the employee can say, no, thank you, but the tax is minimal compared to, you know, what they'd pay in, what they'd have deducted from their paycheck if they were paying it on their own. Does that answer your question, Sherry?
Yes.
Okay. So this one, I pull up when we're doing our quarterly FMLA returns, and I just plug in the number, or if I'm in one of my next slides, I'll be talking about what happens when an employee has FMLA and PFMLA and that fun stuff. So it's a tool, another tool to use. So, disclaimer. I do payroll, but I'm not a human resource expert. So I know the payroll, processes around FMLA and PFMLA. There are a lot of rules, and I have clients that go to human resource lawyers to make sure they're in compliance. And what I've seen is that when there are employees, they might have short-term disability, and then they're on FMLA, and then they get PFMLA, and there's been times when we've actually had to ask the employee to repay us back, not us, but my clients back, because they were also receiving supplemental vacation or sick pay while they were on leave. And you don't want them to receive in total from all their benefits more than what their regular gross wages would have been. So just something to think about. This calculator is something one of my clients uses. It will help the HR team when they're calculating FMLA and PFML, an estimate of their weekly pay. There still might be a true up at the end that you need to do. You might have to ask for a little bit back. That's hopefully not the case, but this weekly pay estimate will help you, at least before they go on leave, determine how much they might make and how much vacation and sick time they could take to supplement without paying them too much. Out-of-state payroll. If you have an employee working out of state, you have to look at that state's payroll laws. So does that state have unemployment tax? Do they have income tax? Do they have local taxes like school district taxes based on where the employees work, where the employee lives or is working? There are multiple different rules. Every state is different. California has probably been the hardest that I've come across. Also, some states require that you register. California requires that you register your whole business in California, which also means California state federal tax returns or state tax returns on top of employee state taxes. There are a lot of states that just say, oh, we just need you to register for a payroll tax withholding account number so that you can deposit your taxes. So make sure you look at each state's requirements. I put a couple links here that I really like. I don't love Zenefits Payroll, but I like their site for determining what you need to file in each. Let me just pull it out. In each state. Or not, because it doesn't. Oh no, I broke it. No. Okay, I'm gonna, oh, there it goes. pull that up after our break so that you can see it. But that's the end of our state payroll. I have polling question number 3. True or false, employers with less than 50 employees must pay 63.33% of the 4% Washington State PFML premium.
All right, I'll give everyone a few more seconds. And remember that your answers are anonymous. So if you're not sure, just give your best guess. And then Shireen is going to talk about it after. All right, just a few more seconds here. Okay, going to end the poll and share those results. It was almost split.
Okay, so this is a confusing topic. PFML premiums are not required to be paid by, the answer is false. Employers that have less than 50 employees do not have to pay any premium if they don't want to. They may pay an employee portion of 63.33%. The second part of this statement that's wrong is that the employer portion is 36.67%. So employers never have to pay 63.33% unless they elect to pay on behalf of an employee. Okay, I think we can take a break.
All right, awesome. I don't see any hands raised and there's not been any questions yet come through. So if anyone thinks of anything through the break, you can either raise your hand again or go ahead and just put them in the chat box. With that being said, we'll go ahead and take a 10-minute break if everyone wants to meet here after, let's see, 8 after the top of the hour. I'll go ahead and put that in the chat box for everyone as well. Have a nice break.
Thank you.
All right, welcome back everybody from break. Hope you went and got a good snack or something to sip on. If you would let us know when you are back from break by either putting it down in the chat box, or if you'll select the participants button at the bottom of your Zoom screen. You might have to shake your mouse if your screen went to sleep and it'll pop up. It'll then pop out and you can use the little green check mark button to let us know that you are back. Once we have most everybody, we will go ahead and get started. All right, I'm seeing some check marks come in and I see Sharon. Hi, Sharon. So we'll go ahead and get started. I do think that we were going to take a minute real quick. Juliana was going to kind of explain. I think everyone got an email that went out just briefly before the presentation. So Juliana, if you wanted to hop in and explain a little bit about that for us.
Yes, thank you, Heather. I sent a listing of the wholesale pricing for QuickBooks Online that we can offer for clients if you decide that you wanted to go that route. Now, you don't have to get QuickBooks Online through a firm. You can just go directly through Intuit, so that's an option as well. But we can help with transitioning your file from QuickBooks Desktop onto QuickBooks Online and sort of be a middleman between Intuit and you to make that transition seamless and easy. Oh, and there's a screen share. So as you can see, QuickBooks Online offers several different versions. And I think based on what I understand of your businesses, I think a lot of you will probably be looking at Essentials or Online Plus to provide the features needed to support your business operations. But if you do decide that you want to make a transition, you can email Jessica and she will get you in touch with us at Clark Nuber about starting that process. So I just wanted to get this information out to you so you understand what's offered and you can make an informed decision.
Thank you so much, Juliana. And again, like she said, if you want to go ahead and email Jessica and let her know that you want to get connected with someone at Clark Nuber, she can go ahead and make that connection for you. So we will go ahead and get started again. Shireen, you're welcome to share your screen and continue forward.
I did want to go back to this benefits section, and Gusto has a pretty robust one as well. If you click into any of these states, it'll bring up, so let's say Arizona, you'll see the Department of Revenue, you'll need to register, and Department of Economic Security. Sometimes they'll have links that'll take you directly to that site. So there's a lot of good information here if you do end up having anyone out of state. Just wanted to show you that tool. So our next topic is the paycheck. What's on the paycheck? Your salaries, your any fringe benefits, your taxes, your voluntary deductions. We'll mostly be touching on fringe benefits and voluntary deductions. IRS Publication 15B, which I have in a couple slides. This publication is very helpful. It has charts in there. It has every fringe benefit you can think of. So definitely something I go to often when I need to look up a rule or how, if something is taxable or not taxable to the employee. Some examples of taxable wages are moving expenses, transportation. So transportation are actually two separate items. So you can have up to $270 a month in non-taxable transportation, and anything over is taxable. Qualified parking is a separate one, so you can actually have two separate transportation benefits. Anything over those amounts is taxable wages to the employee. Group term life insurance, over $50,000 of coverage, also taxable to the employee. Cell phone use, taxable. De minimis, which I will touch on next. The de minimis rules are very specific, so we'll talk about that in the next slide. I've also given you a link right here to publication 15B. That'll just open up the PDF for you. Non-taxable wages. These are health savings account. Employer contributions are not taxable. 401k employer contributions are not taxable. Qualified expense reimbursements. This is another touchy subject, and I get a lot of questions about whether a reimbursement is taxable or not, or if they have to put it on the employee's paycheck. And the rule is that they must submit a receipt or some type of proof that they paid that expense. Some examples I've seen are like highlighting the line in your bank statement if you lost your receipt for some reason. It must be for a business reason as well in order for it to be a qualified expense and not taxable to the employee. If you get employees that do with, I spent $100 on this, I don't have a receipt, you can repay them back, but you also have to add $100 of taxable wages to their paycheck. So de minimis, another question I get a lot, especially working with nonprofits. Sometimes they have a lot of little gifts they give out to their employees, and they're always wondering if it's such a small amount, it's $10, do I have to include this on everyone's paychecks? The answer is yes. So if there is something, a property or service that you provide to an employee that makes it so hard for your company to account for it and it's just unreasonable, that is considered de minimis, and it's a very little value. But if you give all of your employees gift cards, Starbucks gift cards, for example, you have to write their name down and add that amount to their paycheck, because no matter what the amount is, a cash or cash equivalent fringe benefit is considered taxable and not a de minimis benefit, even if it's $1.
How about service awards? Would that fall under the de minimis?
How much was the award? So that's a great question. So if you are giving an award to one person, you know the amount, it's not unreasonable for you to account for it, that would not be de minimis. Does that make sense? Okay. So we know our employee deductions: federal income tax, Social Security tax, Medicare tax, state taxes, state income tax. We don't have that in Washington, but if they're out of state, working out of state for partial times of the year and coming back, they might have state income tax withheld. Some voluntary deductions are union dues, your 401k deductions. Those are deductions before tax, and Roth 401ks are after tax. And then your health savings account deductions. So there's just some examples there. And I have a polling question for you. Question is, true or false, my company gives $5 Starbucks gift cards to all of our employees once per quarter. This is not taxable wages to the employees.
I can take over.
All right, I stopped and then shared those results.
Thank you. So the answer is false. So remember that any amount of a cash gift is, or a cash equivalent is always taxable and not a de minimis fringe benefit. So we're going to talk about policies and procedures. Sorry, my son is wanting to join us. Policies and procedures. Okay, so what is a policy and what is a procedure? Policies are, they pretty much explain why a procedure exists and describes who covers it, how it's enforced, what happens if something, if someone doesn't comply with the policy, how are you enforcing it, what are the consequences. So it's always good to have a policy for every part of your company, and payroll especially, because it's so compliance heavy. There's so much risk involved in payroll if you're not paying your employees correctly and not paying the state and federal taxes correctly. Procedures are actually how you do something. So how are you processing payroll? Who's processing it? What happens? What do you do if something goes wrong? What are the exact steps you're taking? It's great to have procedures, especially if you have turnover in your payroll department, because it makes it easier for them to pick up where you left off. I always include screenshots of my processes while I'm going through them, so that they can just go, okay, I go here, I go here, I go. They might not know your system. So also, if you're a lot of the times there's only one payroll provider, one payroll person in a company, and you might have to, leave. And so who's going to help you take over that? So procedures are very important. And screenshots. So what should be included in a payroll policy handbook? You should include payroll activities and forms required for processing new hires. So I think of a payroll handbook as like from the beginning to end, when you hire someone to when you terminate someone, and everything in between. You're going to employment changes. Who makes those? Does HR make the changes? Where do they make the changes? Or does the employee make the changes in the system? And then that all flows into your payroll process. Who is the one updating it? So that's important. Are there special payments or deductions? Vacation payouts, for example, how are those handled? Do you have to have an employee bring back all their equipment before they get paid out their vacation, for example? Controls and safeguards. So of course, internal controls is very important. And I know that sometimes there might be one person that does HR and payroll. I've seen that, and that happens, and that's fine. But you want to bring in someone else. Maybe it's an executive person that can at least do a high-level review of your payroll before you submit it. And I suggest signing off somewhere, that they sign off on the payroll register, or they sign off, I don't know if you do it electronically, they might sign off, sign in there, maybe DocuSign, I don't know. Somewhere somebody should probably sign that register that it was looked at by a second person. There are no questions in there. There's no employees that shouldn't be in there, things like that. And then there's confidential information. So employee information is always confidential. There's only, certain people in your organization who can see that information. So outlining who can see it and making sure your systems are set up so that they're secure and other people don't have access to another employee's information. There are also lots of payroll policy and procedure examples out there on the internet that you can find if you need just like a basic template. Employee responsibility. So that's a big one too. You want to make sure that your employees are updating their information in a timely manner. So if you have to process payroll on Monday morning and an employee goes in and changes their system Monday at noon, that's a little bit too late. So just make sure they're completing it in your set time limits that you've given them. And they know the dates they understand the pay periods and they understand the pay date. That's also very confusing for people. So having all of that specifically outlined in your policy is a good idea. Payroll is one of the largest expenses in any company. And so making sure you're doing that checks and balances to control and protect your expense is vital. I found this payroll records. You'll see that I love Patriot software apparently. They give you some good guidelines around how long you need to keep documents. So for the FLSA, you need to keep documents at least 3 years. And you need to keep records that show how you determined wages for 2 years. So, and for taxes, employment taxes, you want to keep them for 4 years. So there's 432. It shows you what all you need to keep, your employees' information, your work week information, hours of time cards. You want to keep all your payroll registers. If you made off-cycle payroll, you want to keep all that information. Why did you have to make an off-cycle payment? If there are garnishments or levies, keeping all that documentation. You'll probably get a letter from the state with you to make sure that you can back up why you're paying your employee the amount you paid them. And then, of course, all your tax forms, 941s, 940s, W-3s, W-2s, all of those should be kept on file. Okay, so Juliana touched on this a little bit. There are so many payroll providers out there. And I always suggest getting a third-party provider unless, you feel like, unless you're really small and you feel like you have a good grasp on your payroll. Thinking about switching to a third party is always a good option because they're experts in your federal state filing, and it just makes life easier. So some of them are on this screen. We work closely with ADP, Gusto, and Gusto. I also have some clients in QuickBooks Online as well. For Clark Newber, we use UltiPro, and I've heard great things about them too. If you have questions about moving to a third party, just let us know. We don't get anything back from these. We don't get any sort of monetary reward back or anything from these payroll providers. These are just people we've worked with over a number of years. And then the last thing I'll say is that and it might be my preference, but having an HR system and a payroll system that works together, usually I would say use the same system, but I know that's not always feasible. But something that can link together is going to be the most efficient, less room for errors, and it's just a better way to go for your company and making sure you're doing everything correctly. I do have I have an example of, a system that doesn't work for HR and it doesn't flow into the payroll system, and it's always a mess every other week. So that's always something to consider. Okay, certified payroll. I don't have any clients that do certified payroll, but I wanted to touch a little bit on this topic today. So when you have certified payroll, you have to do a weekly payroll report that's submitted by employers who work on federally funded projects. And to do this, there's a form, WH347, that can be filled out. And I think on my next slide, okay. And then you fill this out just for any week that you're performing contract work on that federally funded project. And then you'll also sign a statement of compliance that goes along with your report. And it's confirming that you paid all laborers. So this is the reason you paid all laborers and mechanics at least the local prevailing wage and fringe benefit for similar work completed in the area. So that's the reason why you're filling out these forms, so that they can make sure that the pay is fair and equal.
And Shireen, I'm not sure if you addressed it already and was something that you went over, but there was a question. I don't know if you saw it come through. Do you have any templates about the payroll policies or procedures that you could share with everybody?
Yeah, we can find one for you. Sorry.
Perfect, thank you.
Yeah. So who needs to submit certified payroll? If you are fully or partially funded with federal money and have a contract value of over $2,000, you may complete, this was a little bit confusing, but you may complete the WH347. If you don't complete that form, you at least have to provide all of the information that's requested on the form. So my suggestion is to fill out that form. I think it's the simplest way. And then worker classification reporting. So if you have a worker that's doing multiple types of work on different projects, you actually have to report them multiple times. So you have to report each job they worked on, their hours, and all the information that's requested. So then we talked about prevailing wages. You should generally pay prevailing wages if you have laborers, mechanics, painters, electricians, plumbers. It's not an exclusive list, but those are generally the people that you might see. And then Washington State states can actually have their own prevailing wage rate. So you'll want to look at that if you have anyone working out in a state with a different prevailing wage rate. I included a link here that takes you to that site. There is an exception. Of course, there is always exceptions. Apprentices and trainees. So an apprentice employed under apprenticeship program is in the first 90 days of probationary employment as an apprenticeship is exempt from this. And also trainees, so people receiving on-the-job training in a construction occupation under a program, you have to receive prior approval from the DOL for a trainee to be exempt though. So, and then this is the law.
If I could say something really quick, just to respond to the question in the chat window, why the certified payroll is important is exactly what Shireen was just talking about. It's those prevailing wages. It needs to be ensured that you are paying your employees and compensating them appropriately. And so they're enforcing the certification to make sure that that is happening. So I hope that answers your question, but that's why it's a requirement. They're not going to give you a bond unless you can prove that you are a fair employer. So, okay, thanks. Sorry, Shereen, go ahead.
Thank you. So this is just the prevailing wage rate map. And I don't know, I think this might have been updated for 2020. I have to check, but Washington's up there. So. And then certified payroll report, I just wanted to include a couple of screenshots of what it looks like, just so if you do have to do certified payroll, or you have construction companies that are doing federal projects and they have to do certified payroll, you could at least have something to look at what the different boxes are. There's 2 pages. I will say that ADP does do certified payroll. I'm not sure about other third-party providers, but I know ADP does. So another good reason to switch to a third-party provider, something you can recommend to if you know companies that are doing federally funded projects, because this could be a lot of work if you have multiple employees working on multiple jobs in a week. And then this is just the second page. Okay, my favorite topic, payroll accounting. So when you're preparing your payroll, you're paying your employees, but then you might have a separate accounting group, which I'm curious to know if you do. I, Juliana, also do payroll, but we also do the financial statements for our clients. So we're always making sure that every month we're recording the payroll in their financials properly, because you want your payroll expenses to tie to what you actually paid out. So it's important. It's an important topic. This is an example, and it's a lot, and it's based on accrual and not cash basis, which I will not get into in this class, but here it is. So we'll go over it a little bit. Your salaries and wages. This is your gross salary. I wonder if this will let me use a laser pointer. Can you see that? Oh, cool. Okay. This is your gross salaries and wages. So that's I spent $1,000 this month on gross, before taxes or deductions or anything, on my employees. I paid $1,000. Then you're going to record your federal and state taxes payable. So this is your employee taxes that you're paying, that you need to pay. So employee taxes, federal withholding, Social Security, Medicare, employee portion of FLI, MLI, that's the PFML tax. If you have a 401k, you're recording that as a payable. So that's the employee portion. If you have, okay, and then if you pay, so I'm an employer, I'm paying $60 towards my employees' 401k. That's an expense for me. So I'm recording that under my employee benefits account as an expense. I also have to pay my employer federal taxes. That's an expense for me too. So I'm recording that. I also have state taxes payable and FUTA taxes payable. The reason why I'm putting these in a payable account right now is because I'm not going to pay them until the quarter ends. but because I'm on an accrual basis, I'm also recording them as my expense. And then your cash. So this is the net amount that we paid to the employees. It should tie to your payroll register. So when you see it, let's say you have a register, it says net deposits, you do electronic deposits into everyone's account. This is the amount that got deducted from your paycheck, from your bank account. And this is the amount that got deducted for any taxes and benefits paid out. Every quarter we tie out the form 941 to our financial statements. So you'll want to double check, take your quarterly financials, make sure your total wages, tips, and compensation ties to your 941. If it doesn't, you'll need to look into why it doesn't and possibly make an adjustment. It's also a good double check to make sure that you filled out this form correctly and that you don't owe any more taxes, or maybe you do a refund. The lines 5A through 5C are also easy to tie to your income statement. They should be expenses for order, so they should tie. And then line 3 and 5D, those are employee only taxes, so those would not be on your income statement. Those are only liabilities, and once you pay them, that liability gets wiped out. And the Form 940, another one that you can use to tie out at the end of the year when you close your books. How much did you pay to all employees? So that should tie to line 3, and then your taxes paid out. So it's an employer paid tax, so you should be able to tie line 8 to your income statement. And a polling question. I think this is our last polling question. Okay, true or false? Employee 401k contributions are recorded as an employee benefit expense on the profit and loss statement.
All right, I'll give everyone a few seconds to put in their answer. Again, these are anonymous, so if you're not sure, just give your best guess, and then we're going to talk about it here in just a few moments. Waiting on just a few more people. All right, I'm going to go ahead and end the poll and show those results. Looks like everyone either got 100% or 0.
100%, great. So the answer is false. That was a tricky one because it should be, the first word in that statement should be employer 401k contributions. So employee 401k contributions are recorded as a liability and not an expense. So I'm an employee of Clark Newber. I pay $100 into my 401k. It gets deducted from my paycheck. It's not my employer didn't pay that, I paid it. So it would not show up as your as an expense on the employer's books.
And the reason is when you record the gross wages for an employee, that's where that initial wage expense is hitting your profit and loss statement. What the employee decides to do with those gross wages could be anything. Some of it can go to taxes, some of it can go to a 401k deferral. And so if you take, it's already been recorded as an expense one. So if you pull it out and you stick it in a liability account until you can submit the payment on behalf of the employee to the IRS or to the 401k administrator. I also wanted to add something else in regards to the 941 and the 940 reconciliations. When you submit all of your financial statement information to your tax provider at year end, one of the things that they are probably going to ask you is, do your wages per your W-3 match your tax returns? And they're talking about the 940 and the 941. And if you don't perform that reconciliation at year end, they are going to be performing it at year end. So it's really important to make sure that you are categorizing those payroll items properly, because it does flow into the tax return that your tax preparer does. So that's why it's a good idea to double check and make sure that all of that is penciling out correctly. And if you have a payroll service provider like ADP or Gusto, they actually file all those returns for you. And so it takes away one of the big steps is having to file it yourself. If you haven't it filed for you, that's great. And then you just perform the reconciliation on a quarterly or annual basis. Just wanted to add that.
Awesome. Thank you. And thank you, Shireen, as well. I'm going to go ahead and open the floor up to any questions. We don't have anything that's come through the chat box. So if anyone wants to put anything in there, we can go ahead and read those out loud. Or if you have a question and you want to raise your hand, we can also call on you to ask a live question. In the meantime, or while we're waiting on any questions, I do think Jessica had a special announcement to make. So Jessica, if you wanted to go ahead.
Hi, sorry, I couldn't find my unmute button there. So for next Tuesday's class, we have Linda Womack coming back from Minority Business Council over down in Tacoma. She will come in and talk about EDIL compliance and PPP compliance. She is hosting a workshop coming up, so we want to make you all aware of that. So if you're interested, you could attend separately. And also for anyone who is interested in doing the company spotlight in the beginning of a class, please reach out to me. I'd be happy to showcase you. Thank you.
Awesome. Thanks to Jessica. And if you want some more info about that other webinar, I think you can probably just email Jessica and she can get you that information as well. I haven't seen
I have a quick question.
Go ahead, sure.
Yeah, Jessica, does Linda still have the PPE still available?
That's a good question. I need to check in with her. I know that she mentioned that in the last, in the beginning of class, so I would confirm that for you.
Okay, thank you.
All right, and I'm not seeing any other questions come through. Shireen, I think you just did a great job explaining everything. These slides will be sent out and the recording. Jessica's going to send those out to everyone. If you do have any questions that you can think of in the meantime, you can also email those to her and she can get you connected with Shireen or Juliana. We want to thank you guys all for joining us today, and thank you to Shireen and Juliana for presenting. We will have another webinar this Thursday. It's going to be the same time as this one was. So we're just going to wish you all a great rest of your afternoon, and we'll see you all on Thursday.
Thank you.
Thank you.
you.